And hello, welcome back to the Edgewonk review number 10. And let's take a look at this journal and let's find out if the trader can turn around his trading and become profitable. So this is another interesting review and another interesting journal actually that you sent to me. And by the way, you can keep sending me your journals if you want me to review yours in the next video. And you can clearly see when we look at the graph here in the home tab that the trader is in a loss. And yeah, he, especially after trade number roughly 80, something has changed here dramatically. He had a huge series of losing trades. He has recovered a little bit, and then he recently had another good run. But let's try to find out where the problems lay. So when we look at the journal, I always like to take a look at the tilt meter, and the tilt meter overall looks quite decent, I think. We cannot see any real big red streaks. There are a few times when you have more, like here for example, you have more than a few red ones after each other. So a few consecutive tilt meters that are red, which highlight issues. We can address that later and look for reasons here as well. And let's first look at the chart lab, and yeah, this is again what we see, the tilt meters in the background, and overall the tilt meters actually again we want to look for outliers. So and let me just move over. Doesn't look like it's this is our Edgewonk trader development program. This is the course structure here that you can see. I will post a link to this in the description below. And the first videos are available for free. You can just click them and see. And the lesson number 3 after the first two ones are the ones where you set up your Edgewonk. And the third one is here, mastering the basics bottom-up approach. And this is, it fits really nicely into this review. And when it comes to trader improvement, trader development, and just becoming better, it is always important to look at the big things first. It's not important and not really helpful to look at all the nitty-gritty stuff if you are a losing trader and if you are just starting working on your trading system. If you have never done any review processes, or if you have never looked at how you can improve your journal or your trading actually, it's important to not go into the nitty-gritty. It's not important to look into position sizing right away, or how you can squeeze out a few points here and there, or if you could let your winning trades run maybe a few points longer or whatever. It is not important to get into the very, very advanced things. You need to really look at the basics, which are discipline, emotions, impulsive decisions, expectations, objectives, and your attitude overall. And only after that, only if you have really mastered those areas, the very basics, you can move on to trade management, order optimization, risk and money management, and then even going further. But you need to really build your trading on a solid foundation. If you don't have a foundation, everything else that you build on top will not work. And also, the good thing is that if you can fix those things, the basics, usually you already see a huge jump from often losing to right away winning trader. And we can see that in this journal again. It is really, really great to see. Let's actually go to the chart lab, and the trader uses an entry comment. For example, he has 3 entry comments according to the plan: too early and too late. Let's just look at what happens if you only tick the ones according to plan. And you can see right away, so he had 370 trades in a journal, and 230 are according to the plan. So he took roughly 140 trades that are not according to the plan. And you can see he would have made a potential return of 31% on his trading. Compare that to the 7% that he lost. And you can see that if he follows the plan, he would have made a lot of money, or he would have made huge returns actually, compared to being a losing trader overall. And this really highlights the importance. You don't need to get into the nitty-gritty. Look at the one thing that you can really, that really is responsible for the majority of your losses. So really try to find this in your journal. Try to find the one thing that is responsible for the biggest losses and the one thing that is really a big outlier. And the trader, if he takes entries that are according to the plan, he would have made a lot of money. And if he takes the trades that are too early and too late, we see the exact opposite. So he would have lost 37% compared to the 31% that he made on the other trades. And that's how you come up with the result of minus 7% on his overall trading operation. So his system, the way he trades, seems to be a positively performing system. So the system seems to be profitable if he just would have followed the rules. And you cannot really overemphasize this. This is really the one and only finding that the trader needs to realize, that he could have been profitable over this time period if he would have just followed the rules. Now, obviously, the question is, why is he breaking the rules? And for that, he needs to develop, he needs to improve his emotions and his routine. And this is something that you also would do in the trader development program. You would improve your processes, your routine, maybe even have a trading checklist. I noticed that he does have some custom statistics which we can look into later, but it seems like they are not really used that well and that on all of the trades, and also they're not as in depth. So this is something that the trader should look into. I also think that ending the week with a Friday checklist would be helpful to the trader. 5 things to do before you start your day, which is also an interesting lesson. And by the way, there is something that when we go to the trade analytics, let's take a look at, he has something that I find interesting. He has one custom statistic which is called preparation. And you can see when he went through the watch list, he has a positive profitable performance of $4,600. Compared that to overall, he lost $2,500 on his total trading performance. If he would have just traded those setups where he did his watch list, he would have made money. Here, on the other hand, if he failed to prepare, only 90 trades, it's only half of the other ones, he would have lost 12, or he did lose actually $12,000. Also worth noticing, if he doesn't prepare, his expectancy, how much he loses actually per trade, is $140 per trade. Compare that to the ones where he did actually prepare, you only have an expectancy of 25 or 26 US dollar per trade. So his losers when he doesn't prepare are much larger than his winners when he does prepare. So this highlights a little bit of maybe issues with position sizing and risk management, something that he really needs to look into. Of course, the first step is don't let those trades happen. When you don't prepare, don't trade. That's the first realization. But also, it seems like that when he's trading, he's using positions that are a little bit too big, or he just lets his losers get out of hand. Something very interesting also to note. Here, he does have a comment where he said he reviewed yesterday's trades, and also he would have made, or he did make actually quite a good amount of money. And that is a very interesting finding. It's in line with here the lessons about trading routines, where you learn how to end your week, you learn how to start your week, how to structure your week, how to create a trading plan, how to create a game plan. And I think those lessons would be interesting for this particular trader, because it seems like those are the things, the low-hanging fruits, that he seems to have a good trading system at the core, but he just fails to execute it in the right way. And we don't need to really go much deeper than that, because this is really the one and only observation a trader needs to have. When we take a look at the simulator, you can see that when we start the simulation, it is all over the place. The lines are very far from each other, which means that there is a high variance in the trading system. Also, you can see here's the starting place right now with the current balance, and then over 500 simulated trades in the future. Most of the simulations would end up in a loss. Very rarely, just a few will end up in a profitable scenario. So the trader, if he continues the way he has been trading, then it is very, very likely that he will not see any positive results. But again, let's just filter out the trades that are too early and too late. Let's just look at the trades where he trades according to his plan. Let's tick that again. And now let's take a new simulation. And you can see now, first of all, the graphs are much, much closer together. Also, more importantly also, or just as important, is that the simulation graphs, they point into the right direction. Now, you won't even find one simulation, no matter how often I will repeat this, that is in a negative performance, or that shows a negative performance. So again, this is really the one and only thing the trader needs to work on. Avoid trades that are not according to the plan, and prepare better, prepare more often. And if the trader doesn't prepare, then it's very important to not trade. That's what his trading journal shows the trader, and that is the #1 takeaway for this personal type, or for this person, this trader.